Hello traders, welcome back to FTMO. Nelly here, and today we will focus on an important topic for all the forex traders: trading on a tilt and negative spiraling. If you're not familiar with these terms yet, don't worry, I'll explain everything. But before we get into it, let me just remind you of our coaching sessions available for all FTMO traders. We are here for you and ready to support you on your trading journey, so don't hesitate to book a session in your client area. And now let's dive into the topic of today's video. What is trading on a tilt? Perhaps you already know. It refers to a state of mind where a trader becomes emotionally overwhelmed and starts making irrational choices. This usually happens after a series of losses or when a trader fails to meet their own expectations. When you're on a tilt, you may feel angry, frustrated, or anxious, and this can lead to impulsive trading decisions. Negative spiraling is closely related to trading on a tilt. It occurs when a trader's emotions start to affect their overall trading performance. For example, after experiencing a loss, a trader might become emotionally shaken and start doubting their abilities. This self-doubt can lead to a negative mindset, causing further losses and a downward spiral in their trading. But why am I talking about this? Why is it important to be aware of trading on a tilt and negative spiraling? Well, as a trader, your goal is to make logical and rational decisions based on your trading plan, market analysis, and risk management. When you allow emotions to drive your trading, it can cloud your judgment and lead to poor decision making. Fortunately, there are several strategies that can help you avoid trading on a tilt and also negative spiraling. So let's explore some of them. Number 1, take a break. If you find yourself feeling overwhelmed or upset, it's essential to step away from your trading platform. Take some time to relax, clear your mind, and regain your focus. This break will eventually help you shift your mindset and prevent impulsive trading decisions. You can perhaps even write down a list of activities that you can do instead of trading. And once you find yourself triggered, not in the right headspace, just pick one of these to devote your time to. Some of my clients would, for example, cook their lunch, go for a walk, have a cold shower, etc. Number 2, stick to your trading plan. Having a well-defined trading plan is crucial for any trader. It helps you set clear goals, identify your risk tolerance, and establish specific entry and exit points. By sticking to your plan, you can avoid making impulsive decisions based on emotions. Your trading plan is your map, your guidance. Number 3, practice risk management. Proper risk management is key to successful trading. By setting up safety levers such as stop loss or trailing stop and trading with appropriate volumes, you can protect your capital and minimize potential losses. This approach helps you stay disciplined even in times of emotional stress. Number 4, keep a trading journal. Journaling your trades can be an effective way to reflect on your emotions and trading patterns. By analyzing your trading history, you can identify recurring emotional triggers and develop strategies to manage them better in the future. Remember, trading on a tilt and negative spiraling are challenges that many traders face at some point in their careers. However, by being aware of these potential issues and having set particular strategies to manage them, you can maintain a calm and logical approach to your trading. So, if you found this video helpful, please hit a like and subscribe, and don't forget to trade safe.